Hey traders, Akil Stokes here with TradingPower.com. Actually just came off the golf course and well there's a lot of similarities between trading and golf, and unfortunately my skill level in one field doesn't quite match the other. I guess that's not a bad thing, but I'm gonna keep working on it. It wasn't the best of times out there. But anyway, thank you for joining me once again for this week's live room weekend review. We have a few things on the table today. First, I'm going to start off with just taking a few flashbacks of the week that was in the live room. This was our first full week back since last week we had the technical trader workshop. So it's pretty nice to be back and get back in the mix of things. After that, I'm going to talk about something that came up in the syndicate, talk about hedging your position a little bit. And then lastly, I'm going to end with the trade of the week. And this was actually the trade of the last 2 weeks because it was something that started last week and finished this week, and it was just wait and you'll see it. So we'll jump start it off with some flashbacks from this week's live room session, and I'll see you in a little bit. Seeing how I've been out of the live trading room for about a week, I was actually pretty pumped and pretty excited to get things rolling again this Tuesday. Unfortunately, when I started doing my pre-market analysis, I noticed that the markets were pretty much dead this Tuesday. Um, Fortunately, we were able to find two trading opportunities, actually three. We had a failed Gartley pattern, a failed bat pattern on the pound dollar. We had a Gartley pattern on euro yen that I took, ended up getting stopped out for break even. And the one winner we had was on where are we at? New Zealand dollar 5 minute. And this trade was actually pretty cool. It's a structure-based trade slash 2618. What happened was is you can see the market took a push down. We came down to this level, put in double bottom. We then shot up. Now, as soon as we broke this, the V point of our double bottom, so the middle part of it, as soon as we broke this level, what I was looking for was a retest and a chance to enter in a trend continuation type of trade. So I was looking for the market to push up, break and close above this level, giving me a new structure high, and then retrace, giving me a retest and a chance to get long right here. And well, that's exactly what we did in the live room. We used the H3C entry, higher high, higher close, got involved around 82.72, around that area, and went through a little bit of pain. Market spiked up, came all the way back down to break even. Actually had us in the negative for maybe an hour or so, which was great because I had about 50 new traders in the room, and it's always good to see a tough trade like this. It's not fun to hit target ones easy. That doesn't test the psyche at all. Really test the traders' discipline and psychology when you see it bounce around a little bit. So that's what we did. We bounced around a little bit, then as you can see, we spiked up, and the rest is history. So one winner, one loser. Because of our risk reward ratio and how we consistently use a very good one here in the live room, we're in the profit for the day, and started off our first trading day of March with a bang. Well, it seems like a reoccurring theme in our live room, but once again, proper and smart stop placement, well, took us from a potential losing trade of about 30 pips to a winning trade that hit over 70 pips. You're looking at a Gartley pattern here on euro dollar that we took on the live room this Wednesday. And you can see a little choppy up front, but X to A to B, B to C. We had our C to D entering at our 127 and 886. So a really pretty good with risk reward as far as Gartleys go. Now, when we're talking about stops, if you follow me at all, you know I like to use the ATR to base my stops, and I like a zone that takes between either one ATR and two ATR. And I won't get into too much detail on how I do that, but one ATR and two ATR below our initial X leg. And what I'll do is I'll draw them out just like on this chart, where my red line will be one ATR, my second red line will be two ATR, and I ask myself, is one stop placement provide me a better opportunity than the other? And well, in this one, you can obviously see that a 1 ATR stop, even though it's below our structure point here for our A leg, guess what? Doesn't break this previous structure to the left. However, if you look at our 2 ATR, what do? We get right underneath that. Uh, so it should be obvious that the smart decision is to go for 2 ATR stop, and well, that's what we did on this trade. And as you can see, the market has pressed down, pushed past our X leg, however, held at this second structure level before reversing up to hit us target 1 profits for about 29 pips and target 2 profits for about, I think, 40 something. So about 70 pips total, really due to good stop placement. Now, we just finished up talking about a Gartley pattern that happened on Euro Dollar on Wednesday. And actually, the night before, I put out a video to my syndicate members uh, informing them about a cipher pattern sell here on the Aussie dollar as well. And the question that I get from a lot of traders, especially new ones coming in, is, well, isn't it wrong? Isn't it a bad idea to be buying dollars on one pair while selling them on another pair at the same time? And you would think so, but really you just have to trade what you see. Meaning, if you see a pattern on Eurodollar that's valid, it meets your rules, you have to take it. If you see another one on Aussie dollar, again, that meets your rules and maybe it goes in the opposite direction, you have to take it. Now, most of the times you're gonna basically be hedging yourself, meaning one's gonna end up winning, the other's gonna end up losing, and you'll end up somewhere around break even. But every once in a while, you get a situation like this where, well, Aussie dollar came down to hit target one around this area. We then spiked back up, retraced back to the highs, and well, during that retracement, what did Euro dollar do? Boom. Euro dollar spiked up, giving us a two target winner on that as well. So I want to show you guys this to prove it could happen. It doesn't happen all the time, but more times than you would expect, this does happen, especially down on the 5 minute time frames. Now, we'll end this. I want to show you guys the trade of the week, and we're going over to Euro New Zealand 4-hour chart. And this was pretty cool. We're going over this in a live room. I'm gonna delete all this, and I'll try to make it quick, but I'll draw you in exactly what we got. And we talked about this last week in the technical trader workshop, and I've done videos in the past where a lot of traders run away from consolidation. When the market's going sideways, they say, "Oh, you know what? I'm staying out of it. I don't want to get involved. It's ugly movement." But this is the perfect opportunity for pattern traders to get involved in these consolidation patterns. After all, advanced patterns are counter trend trades. So when the market's bouncing back and forth, that works very good for us. And here's what we had on Euro Aussie starting last week. First thing we had was a cipher pattern. We had our X to A to B, B to C, our CD completion up here. And again, we hit that in the live room or in the technical trader workshop for 200 something pips or 100 and something pips. I don't know, something big. But right after that cipher pattern formed, what happened? Well, our C leg, and let me just do this. Let me draw these letters on here. Now, after this cipher pattern completed, you can see it rolled over. Well, what did it roll over into? Check this out. If my C leg now becomes my new X leg, so we're looking at X to A to B down here. Let's move these around. Again, X, A to B. Most of you can probably already see it. We come up to our B to C, and our C to D spikes down here. For what? A bat pattern completion. Makes different color. So we had a cipher pattern, rolled over. I actually got stopped. I hit target one fully. I got stopped out for trail profits on target two. Rolled all the way over into a bat pattern. And well, while this bat pattern was on its way up, hitting targets 1 and 2 easily, as you can see, guess what else we had? One more. X to A to B. Again, let's move these over. We had here we go, X to A. Yep. Okay, there we go. X to A to B, B to C, and our CD completion up here for yet again another cipher pattern. So we had a cipher pattern, roll over into a bat pattern, roll over into another cipher pattern, and as you can see, this cipher pattern as well, already hit target one. So 3 straight patterns in a row. I forgot how much we calculated for. I forgot how much I actually made off this. I had a very good trading week, just trading this back and forth. over 500 pips, I think it was. But just proof that, you know, once you get this pattern stuff down, you don't have to follow a million time frames. You don't have to follow a million pairs either. You can easily pick out a few pairs on a few time frames, and you can get back-to-back moves like this that can, well, this can make your month. All you need is just to happen once a month, and you're good. So, all right, video's getting kind of long, so I'm gonna end it like this. Appreciate you guys joining me once again. There's going to be no weekend review next week. I'm actually going to be out of town on the other side of the country at the Technical Trader Summit. So I'm sure I'll do a post at some point in the meantime there. But no weekend review next week. 12-week training, 12-week transformation members. I'll see you Monday for our training. And the rest of you, I'll see you when I see you. So take care, and always remember, guys, plan your trade, trade your plan. See you next time.
Heart is a blue